Welcome to May 30th, the market update desk with Scott Riley, NMLS 157524. We've come to the end of another month, and this year has been just blowing by. It seems like May is over. Wow, it's just amazing. So, a couple of reports I want to go into more depth than my earlier just update this morning, specifically the trade deficit data. So, what we saw is the month over month trade deficit dropped from a staggering number of 162.3 billion down to 87.6 billion. That's just a tick shy of a drop of 50% in the trade deficit. That's a staggering drop. It's quite intriguing. Now, some other data from that report showed that the value of imported goods dropped the largest amount month over month on record. It dropped 19.8%. So much less trade imbalance and the value of those goods being imported. And that does mean less is being imported, but the total value dropped by 19.8%. Now, as we see this drop in trade imbalance, we're probably going to get a unexpected bump upwards in GDP in quarter two. So this trade deficit decrease is actually going to help our national GDP grow slightly, and that's going to be a positive thing. The other report we're going to talk about is PCE, personal consumption expenditure. So the headline month over month rose 0.1%, which was in line. And year over year, we actually dropped 0.2%, 1/10 better than expected. And that's a very positive thing. We're seeing some deceleration of inflation. Core PCE rose 1/10, and the year over year actually dropped 0.2% down to 2.5%. So we're definitely trending in the right direction. And 2.5%, granted, it's been a sticky decline, may continue to be sticky, but we're honestly not that far off about the maniacal, very headstrong number that the Fed wants of 2%. Now let's go a little bit deeper into the core. So total core, the non-rounded number was 0.12. When we break this down per category, shelter was up 0.6, healthcare was up 0.6, and motor vehicle services, which includes insurance and repairs, was down 0.2. Was up 0.2. So that's a total of 0.10. That means everything else, all other categories actually were minus 2/100ths. We actually had we had a net decline in inflation in everything other than shelter, health insurance, and motor vehicle services. So that's de-inflationary. So it's very interesting when you get deep into these numbers, and it has some positive things going forward. Will the Fed really break these numbers down? At what point is the Fed going to say we're on the trajectory that needs to be and not play from behind the sticks and start to play in front of the sticks? The intermediary numbers, the 6-month run rate for PCE dropped from 2.9 to 2.6%. The 3-month dropped from 3.5 to 2.7. Those are pretty big deceleration of inflation. We also got pending home sales today. That was down 6.3%. Keep in mind, rates were a little elevated during the timeline of when those contracts were probably signed and when they closed. Now, next week is going to be a big week. We get jobs week again. We get the JOLTS report, ADP, and BLS report. So stay on guard. We're going to have a lot of data coming at us next week that may be market moving, hopefully, in a positive direction. The 10-year Treasury is trending down today. We're down to 4.40. Question will be, will we be able to close below that 4.40 barrier? It's going to be very important to watch. Give us a call. We're working all weekend. In fact, we just had an offer accepted about half an hour ago. So the market is on fire out there, and it's a great time to buy. 616-293-2189. Hope you have a fantastic afternoon. Give us a call. We'll help you get pre-approved and work with you to help get your offer accepted. Have a great afternoon.